The rally on markets that propelled stocks higher during January could find further momentum this month in the wake of solid U.S. economic data from the end of last week. The TSX was up a shade over 2% during January, while the Dow Industrials jumped almost 6%. Partly over relief, the U.S. politicians stopped the economy from going over the so-called fiscal cliff and agreed to an extension of the debt limit. Sentiment was further improved on Friday on positive American jobs and manufacturing data, which helped take some of the sting out of other data that showed the U.S. economy contracted during the fourth quarter. But a major headwind could turn out to be an aspect of the agreement that saved the U.S. from going over the fiscal cliff at the beginning of the year. Higher taxes for the rich grabbed the headlines, but the deal also saw the reimposition of higher Social Security payroll taxes, which have risen to 6.2% from 4%. Analysts say this is going to have an effect on consumer spending, and the consequences of those higher taxes will show up as early as this week, as U.S. retailers start to issue preliminary results for January. The major report of the week is released Friday. Economists expect that the January Canadian jobs report will show that the economy created only around 5,000 jobs, down sharply from 31,000 in December. Elsewhere on the Toronto market, BlackBerry is expected to remain volatile after losing ground in the wake of the launch of its new BB10 product. The stock closed up slightly on Friday after tumbling 17% in the previous two sessions, partly on profit-taking, but availability has become an issue as U.S. customers won't be able to get the BlackBerry Z10 until March, a month later than in Canada. From the Canadian Press, I'm Malcolm Morrison.